What's up, everyone? Today is August 19th. It's a Thursday. I'm going to be going over the one trade I took today, one trade only, and that trade was on Netflix. So, as always, let's start with the bigger picture and then we'll work our way down to the intraday time frame. Okay, so let's go to Netflix right now. This is charting, so this is a bigger picture. You can see that Netflix had a crazy move today, and that's the move I'm going to be covering. So a lot of you guys have been telling me that the idea of blank charts has been helping you guys a lot, so that's exactly what I'm going to do. I'm going to pull up a blank chart from Netflix and start from scratch. Okay, so we have a blank chart now. So what's the first thing I always do if you watch my past videos? You know, the first thing I always do is I look out for clear areas of supply and demand. So supply and demand zones. So I'm gonna start on a daily time frame. Let's see. As I talked about, I only work in the range I'm given in. So if you pretend like this day didn't exist, then we could have a daily supply zone right here. Daily, but keep in mind that this daily supply has already been used, so that's why my bad. So this daily supply has already been used twice, so that's why this supply zone was of 0 to no interest for me. So I'm gonna write daily supply, and I don't usually do this, but I'm just gonna put parentheses 2 use, just to show you that used zones don't work out. So if you think about it, institutions have their sell orders placed in this pink box or this zone. So when price comes and hit that supply zone, we automatically reject because institutions have their sell imbalances placed. But once they get the majority of their sell orders placed, and the fact that we touched it a second time and we rejected, now there's little to none sell orders placed in the supply zone, so it's pretty much worthless at that point. And that's why you can see that today, August 19th, which was a Thursday, we blew through the supply zone because there were no fresh orders placed here. So that's just a quick tip of how supply and demand works. See if I can find, okay, I have this daily demand, but it's kind of far away. Actually, I'll just mark it just for visual. Daily. Now from daily I go all the way to 30-minute. So I'm gonna disregard this 4-hour demand just because I'm ignoring that this candle ever happened. So we have a 4-hour supply right here. It's not the cleanest, but definitely want to at least mark it and give it importance, because we did have a pretty aggressive drop followed by this basing candle. So I'm gonna mark this right here. Oh, it's 4 or 3. Right? It's the same on both time frames. So I'll go to 90, and I think the last supply zone was here. This 90-minute supply. So this 90-minute supply zone had not been tested at the time. That's why this 90-minute supply was my profit target. So at 5:30 was my 5:33 was my profit target, because this 90-minute supply was a fresh supply. And yes, we blew through it, but you know, we can never predict everything in the market properly. There's always going to be anomalies which happen. Keep in mind that this 90-minute supply zone was fresh, so it had a very high probability of working out. Just because it didn't work out, that it just means that not everything works out 100% of the time. But the odds were in my favor for this supply zone to reject because it was fresh, and hence this was my target. So now that I have my zones drawn out, let me see if there's any more demand zones. I didn't really like the upper wick of this. Okay, there's 1-hour demand right here. So even though I don't trade demand zones and supply zones as much, I will still mark them on my chart, because I can get a complete understanding of the stock when I chart the supply and demand zones and the support and resistance zones, because it just gives me an idea of where institutions are placed and where retail traders are placed. So your competition in this game are both institutions and retail traders, so it's really essential to know where both are placed so you have the odds in your favor. So now that I drew out all my supply and demand zones, this is annoying me. Let me just go ahead and change this to purple. Or, yeah, pink or purple, whatever. And now I'm going to be drawing out my key areas of support and resistance. So automatically I see that this 525 level has multiple touches as support and multiple touches as resistance. So the exact level I was watching was the 525.15 level. So I'm just going to mark that as a key level because it acts as both support / resistance. So I'm pretty sure you guys already know this by now, but support and resistance and supply and demand are not the same thing. Support and resistance is just areas which act as floors and ceilings. I'll explain what I mean by that. So key level, support and resistance. So what support and resistance is levels which act as support and like act as floors and ceilings. So in this case, whenever price tries breaking the 525.15 level, we immediately get bought back up. And this happened on 3 occasions. So this level is a clear support level. Once we break this level now acts as a barrier or a ceiling. So every time we try coming up to the 525.15 level, as shown here, wasn't perfect, but I count this as 1, 2, 3, 4, 5, and then 6 and 7. Price fails to get above it, so now this is a resistance level. So my plan is to take a break of the 525.15 level, targeting 90-minute supply. So that was my entire trading plan, and I developed this entire trading plan from the levels and from the zones. So now that you have a clear understanding of the bigger picture, let's go down to an intraday time frame and I can analyze my entries and exits. Okay, so I played 4 contracts at the break of the 525.1 level. I'll just illustrate that here. I got filled at 1.67. If you go to a 1-minute time frame, price was hesitating at this level for a minute or two. It didn't go right away, and as I talk about in my other videos, whenever I play the open, it needs to go almost right away because the open is very volatile. So just to protect myself, I scaled 1 contract out for break even. That's just a risk management technique I use. That's just a risk management technique I use when things don't go right away off the open. It's just something I use to protect myself. So I had 4 contracts, but at this point I'm only in 3 contracts. And so as we start moving up, I start scaling my entire position. So I put my first scale out here at 2.26, but what actually wasn't here. It was at 528 because I saw some size placed here. So 528 is when I took off my first contract. But what had happened is I had 3 contracts left and I put an order to fill 1, but by accident I accidentally sold my entire position here. It wasn't because of emotions or anything. It was just a human mistake on my end. I wanted to sell 1 contract, but I accidentally sold my entire position, which is very, very unfortunate because contracts are up 1,000%. And yes, I probably wouldn't have caught this entire move, but I definitely would have caught more than a $3 move to the upside. But I did make 178 on an investment of like, I think it was like a little bit less than 800. It was closer to like 700. So it was still around like 25% on the trade, which isn't bad. But if I was to trade this perfectly without making that mistake, I would have scaled 1 out here. I would have put another limit at 3 from my entry of 1.67 right here. And then I wouldn't have waited till my final target of 90-minute supply just because market conditions have been so hard to trade. And what had happened for the first 20 minutes is NQ was super choppy. So when I'm playing the open and NQ is super choppy, I want to take profits a little bit quicker. So my next area of interest is the 530 level. And why is 530 so important? Because 530 is a psychological number. 530, 520, 540, all of those are psychological levels which should be taken into importance So as soon as we had pushed up to 530 and failed, and NQ was choppy, I would have realistically taken my last one off at about 3.5 from an entry of 1.6. So those would have been perfect scale outs. However, that did not happen. I messed up because I, I I just made a stupid mistake. And that happens in trading. You're not always going to be perfect. But what I really want to stress in this video is that you really only need a couple of trades to make your month. And I'm pretty sure I say this in every other video, but this is just a clear example of that. This one trade, if you theoretically held from low to high, would have been 1,000% winner. So it doesn't really matter if you're playing 100 contracts, one contract, or 10 contracts. You would still have made a lot of money relative to your account size. But I'm going to end the video here. This week has been super tough to trade. I will be here to trade tomorrow, as always, but I really doubt anything will set up. If I just want to analyze SPY and Qs really quickly, you can see that a lot of people were bearish going into the last couple of days because SPY is back at this trendline support. But as you know, history repeats itself. We bounce from the demand zone, we bounce from the trendline support. Buyers are not really willing to give up this major trendline support, which has been dated back to last October, just because we don't really have a catalyst to move the market lower. Um, Somebody told me this: the market is always going to move higher, but to move extremely lower, we need a major catalyst. So, in my opinion, that's going to be the I think it's a taper Fed meeting on September 22nd, so next month. And if that doesn't go well, then I'm definitely expecting correction, maybe down to 4K, maybe even lower. But I'm going to end the video here. I will be here to trade tomorrow. If you have any questions, just hit me up on Discord. That's where I'm the most active, or just leave a comment in the YouTube section and I'll respond.